All right, welcome back. Welcome to another episode of Forex Tech Magazine. You're here with your host, Lewis. Hope all you are having a very happy, what's this, Wednesday? Yeah, Wednesday, December the 12th, 2018. Almost to the end of the year, to the end of the month. Almost ready for 2019. If you haven't made any money so far, man, stick with us. Hopefully, we'll be able to give you some tips, little tidbits here that might be able to help you make your 2018 prosperous, and hopefully going in 2019 very prosperous as well. Before we get into that, though, let's get into the disclaimer here. The disclaimer goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that we share with you should be considered to be financial advice. If you are in search of financial advice, then our advice to you would be to seek out the assistance of a licensed, competent advisor. All right, well, now with that being said, let's jump right into why you came here in the first place, and that is to look at some trading ideas. All right. This is the Great Britain Pound US dollar. Before we get into this one here, let's step back. I like to start with the New Zealand dollar first, and then work my way up to the US. All right, so let's look at this chart here. This is a daily chart. This is the Great Britain Pound, New Zealand dollar. Let's see what we got here. Now, if you remember correctly, we were just in this pair a couple of days ago, and we were shorting this one, and we did hit our target, and it looks like it still has room to go. With this particular pair here, it looks like we put on the fib tool, and as you can see, it is still approaching this extension here, which would be the 1.799 handle. Now, those of you who are not familiar with how Fibonacci works, essentially there are, you have your first wave or your first move, which is your A to B, right? Then you have your pullback, and the A to B is going in the direction of the overall trend, right? So if the trend is going down, then you got an A is going to be at a swing high, the B is going to be at a swing low. If this is a downward move, if it's the upward move, then it's going to be the exact opposite. The A is going to be at the swing low, the B is going to be at the swing high, blah, 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 right? Then you have a C, which is going to be a retractment, and I don't know why they don't just put C on here, but whatever. But the C is going to be the retractment, and that's where the market kind of takes a breather from the original move, right? It's the pullback, and a lot of times people get fooled because they think that the pullback is some type of reversal, and so they go in and they take a long position, and usually they take a long position at exactly the wrong time, and only to have the price move against them to finish the Fibonacci sequence, which is the D move, which is if you look at it here, this is A to B, B to C, and then C to D would be here at this extension right here, where that red line comes in at. And the cool thing about using Smart Trader, and if you haven't already went to use our link to go to the site and register to use this free software, cool thing about it is that they automatically place the Fibonacci sequence on the chart for you, so you don't even have to do it yourself, right? You don't have to go out there and try to figure out where do you place it. I mean, it's just as simple as coming in, clicking on the tool, and just clicking. And once you click, it automatically, bam, places it on the chart for you. Right, it takes a lot of the guesswork out. Now you can always go back and double check it. You have the ability to come in here, right, and use your own, Fibonacci, drawings. You can do it yourself. Me personally, I just prefer just to use the smart tools to go in and make it a whole lot quicker, a whole lot easier, right? I'm in and out, right? Look for my pullbacks, right? And in this particular case, they happen right there around where you were having these. Happen right around where you had your support and resistance lines, right? Which makes sense. And you can see right now where is the D extension is drawn out, and all you got to do put your price target there and wait for it to happen. Now, this particular pair right here, we didn't wait for the extension. We wanted to get in and out. I don't like staying in trades for days at a time. I would rather be in trades for a couple hours at a time and then be out and on to another trade. That's just the way I like to trade. For me, it just makes sense. Now, for other folks, they may want to do the whole swing and go from the C extension to the D extension. And if you do, there's nothing wrong with that. It's fine. Go for it. Me personally, I just like to I try to compound my money as much as possible over time for me to get a better return for my money. That's just me. If you don't have the time to monitor what's going on in the market, and if you prefer to just kind of be a swing trader type person, then go for that. The other thing is I like to do too as well is I like to pull my stop loss up past my entry point, and therefore creating what we call a risk-free trade, right? Essentially, because if I got in, let's say if I got in here, right? Then once price drops below, and significantly, not just $1 or a penny or whatever, but get a nice little margin there. What I like to do is I like to bring my stop loss, which may have been up here somewhere. I like to bring it down, right? So therefore, I guarantee myself that no matter what happens in this trade, right, that I'm going to come out of this trade with some money, right? I'll still have my stop loss in place. Stop loss could be down here somewhere. I mean, not my stop loss, but my take profit in place. It could be down here somewhere. But I'm going to bring my stop loss up. Now, by me doing that, sometimes when the market might do another additional pullback, I might get stopped out earlier on a trade, and I'm okay with that because for me, as long as I made some money, right, I'm good. Right, as long as I had a risk-free trade, I'm making money. I'm good because I know that I can always go back in and do a re-entry, look for another entry point to get back into the trade. But I just want to make sure that as much as humanly possible on every trade I'm making money, and that if I do take a loss, I'm minimizing that loss and not taking something that's going to take me out of the game, right? Because once again, when you don't know where to get in at, you don't know where to get out at, 9 times out of 10, you're going to get in at the worst possible time, you're going to get out at the worst possible time, and it's going to crush your account. And that's why a lot of people wind up just not making the money that they should be making or the money that they could be making in the forex because they just some little nuances and stuff that they don't really understand. Another really good thing that you could do if you haven't done it already, like I say, if you sign up with a Smart Trader account, you get a free trading platform that you can use as well, and it's a demo. Use it. Consistently get in here on a daily basis and practice trading. Practice looking at your charts. Practice, looking at your indicators. Right. The more you do this, the better you're gonna be, and that's the goal. Get your confidence level up. Don't just sit there and trade when you got money to trade, because if you only trade when you got money to trade, 9 times out of 10 you're gonna lose that money because you're going in there, you're using real money, and you haven't really went in there and took the time to go in there and practice your chartings, your technical analysis, and so a lot of emotions get involved because you got money on the line, and then all of a sudden you start making mistakes, and one mistake leads to another mistake, and next thing you know, account balance is back down to where it was originally, which ain't which is not good, especially if you didn't start with that much in the first place, and you're back trying to figure it out. So just save yourself some time, save yourself some money, and just get in here and just commit to yourself, right? To come in and to just really practice. If you don't have the money right now, I know a lot of people say, but if you practice it, it's not real money. Yeah, that's right, right? The Navy SEALs had a really great saying. I love it, and I love it. And it says the more you sweat and practice, the less you bleed in war. And the same is true, especially for forex, right? The more you practice this, the less you're going to your account is going to bleed once you start putting on real trades. Okay. So, but anyway, just to kind of go back over this right here and just kind of reemphasize what took place with this particular pair. This one right here, we were profitable with this one. We made money on it. I think we made like $8 grand on this one, on this account. Also, too, this account right here that we're trading on is a demo account. All right, and I want you guys to think this is real money. This is a demo account. Okay. We were switching back over to the live account at the beginning of the year. I had to take some time off from that just because my schedule didn't permit me to trade that, do this, and everything else that I got to do right now. It's the last part of the year, and I got a lot of stuff I need to close out, a lot of stuff I need to take care of. So I just don't have time to do that. But at the beginning of the year, I'm going to get back into that account again. We'll trade it live. That's going to be in the afternoons, 5 p.m. Eastern time, where we'll go in and review that account and give you updates, show you the trades. With that account, we're not restricted. With this account right here, we restricted ourselves to just the Great Britain pound payers. With that account, we're not restricted. We're open market. We do futures. We do options. We do forex. But that one is a definitely fun to watch if you haven't seen it yet. Maybe go back and look at some of the old episodes. All right. Okay. So yeah, for this one right here. So for right now, are there any trading ideas I would do for this particular pair at the moment? No. Just kind of looking at this one right here, I think it's kind of resting. I think we kind of talked about this a little bit yesterday, right? You kind of saw where the price was starting to get a little curvature. It was going up, and thought that, hey, this might have been a period where the price was getting ready to turn. This is actually where I kind of got out of this. Where I wound up getting pushed out of this this particular pair. Price went up and took me out, but as you can see, it later went back, retraced that, and now it's kind of making the same pattern again. Will it continue to curve up and pull back? I don't know, but I will tell you this. Look at where price is at right now relatively to the support resistance. It's a couple things. There is a potential for this thing to push back up, even though I know that our D extension is here. There's no guarantee that it's going to touch the D extension. All right, now there's a probability that it will, right? And I think more than likely it probably will touch this D extension here, right, before it bounces back up. But there's no guarantee that it will. If you're not already in this trade right now, I probably wouldn't get into this trade right now because price is kind of in that no man's land right now, right? You see it's moving down, right? But you also can see that, okay, right now is making I ain't gonna say it's a bullish candlestick because this is really nothing. This is really kind of a meaningless candlestick here. But price, is seeing some buyers, and it just could be a little bit of, exhaustion and selling right now that you're seeing before price makes his next move down. Touches off on this D extension before it pushes back up. If I had to choose, and if I was forced to make a decision, it would probably be to sell and to make this my price target. But then also too, you got to remember, where would you put your stop loss at, right? And a stop loss can't just be willy-nilly. We're going to get into stop losses too because yesterday we started something new, and I want to talk about that here shortly. Stop losses can't really be willy-nilly. It has to have some type of meaningful position. If not, then you can just expect your stop loss to get crushed at any given time. And if that's the case, you might as well just set your money on fire instead of trying to trade it in the market. You got to be smart. You got to have a plan. And it has to make sense. All right. So anyway, this one right here, I would stay out of the market right now on this one here. If you haven't already, if you don't already have a position, but if you do have a position, hopefully your position is to sell because the minimum of this thing is down, right? Don't see it hitting a U-turn just as of yet. I think it needs to complete that D extension before it starts some type of significant reversal. That's just my opinion. Could be wrong. Opinions are like, everybody has one, so you can form your own. All right, so this right here is the Great Britain pound Canadian dollar. As you can see, this particular pair is moving sideways here, right? It's a high, low, high, low, high, low, high, low. Right? Definitely not like what you're seeing here, right? This right here is trending down. You can clearly see the downward momentum, the downward trend. And over here, you can clearly see that this thing is moving sideways, okay? So it's a little bit different than the one that we just looked at. As you can see, it's like 1, 2, 3. He's working on his fourth day as being selling off. This right here was a major resistance. That was a minor resistance, minor support, major support. Price has clearly blown through this support here. It's actually lower than the previous low. So now the question only remains: where does price move from here? Does price go all the way down to the support, or does price starts to reverse and come back up? That's a good question. So there's another one that's kind of like out there in limbo. Don't really know. Not really looking to trade. Here's the other thing too, folks, is that when you trade in currency pairs, you don't have to force a trade, right? And I say this a lot. Look at what's out there and wait for the setups to happen. Wait for the setups to happen. They're going to happen. Sometimes it just takes time for it to happen. That's all. All right? Look for the setups to happen. And once the setups happen, then you can go in and take advantage of it. Now, I'm not going to trade off a daily chart anyway, but what I would do is like to go down to the hourly chart and then kind of trade from here. And then you can even go down a little bit further if you like. You can go down to a 15-minute chart, trade for that one, or a 10-minute chart if that's what you choose to do. But I just kind of like looking at the hourly chart for now, because for me it just makes sense. When you look at this one right here, you just came through, what is that support, all right? And you got to ask yourself, how far will price fall? Will price touch down at this next major level of support? Or will it do kind of like what it did in here, which didn't get all the way down, and it starts to reverse? And honestly, if I had to look at this right here, and if I'm honest with myself, seeing how price came down to here, right? This is that 1.66547, and then it still was a significant amount of the move here, right? I would say that price probably would be, the incentive would probably be for it to come around that same area for here, right? So that means it doesn't have much more to go, essentially, before it makes a U-turn, which makes sense when you start looking at it in the sense of, even looking over here, right? This New Zealand dollar, Great Britain pound New Zealand dollar, it doesn't have that far to go, right, before it makes that failed completion. And then once it makes that failed completion, we're going to be doing what? We're going to be looking for a price to make a U-turn, right? Make it for, okay, it hit its A, because this was going to happen is that this C is going to become the A, this D is actually going to become the B, and then price is going to pull back up. We're going to be looking for another C. We're looking for another D extension. If this fib sequence is to continue, if it doesn't continue, and this is an actual U-turn, well, then we're going to look for price to shoot up past this this level here, and then we're going to understand that, hey, you know what, I think we got something a little different here. The market's making a U-turn, so then we trade accordingly. So at any rate, you kind of see how these, by looking at one pair, you can kind of give you some insight into the next pair. That's something that you should be using, right, to help, potentially make you a better trader and help you get better trades on the books, okay? So at any rate, with this one right here, once again, I'm not looking to get into this pair. If I did, it'd only be for a short period of time. I put in a really tight stop loss, really even tighter take profit. So it just really wouldn't make sense to be in this particular trade. Not for me. Not now. You're talking about 54, 55 pips. It's not that much. I mean, yeah, that's good, but if I did, I wouldn't be using any type of leverage. It would be a one standard lot. I wouldn't be trying to trade 2, 3, or 4, 5, 6 standard. None of that. It would just be a basic trade with tight stop losses and a tighter, take profit. And I don't even think I could get the risk reward ratio to work out on that one to even get in there. So nah, I don't want that one. Let's look at the next one, which is Great Britain pound, Japanese yen, which I hate, blah, blah, blah. So here's another one that's really kind of trending sideways. I know it looks kind of odd. You think, well, nah, it's trending up. No, it's trending down. No, it's trending up. No, it's trending up. No, it's trading sideways, trust me. It's just that it's been doing it over a bigger swath of time, right? It's just, but it's not making any significant new highs, right? Not really making any significant new lows. It's just kind of trading around this range, right? Right up in here, it's the max is gonna go. What's that? 149.951, right? Not going any higher. Not now, anyway. Right? And it's 139.822, not going any lower, not anytime soon. Right? So with that being said, this particular pair here, once again, it's in limbo, right? It just came off of this minor support, right? Because this has been support in the past. See where prices came down and hit it and bounced back up, came down, hit it, bounced back up. It came down and hit it, and guess what? It didn't bounce up. It went through it, right? So logically, the next level to look at would be this level here, right? But because, and you've probably heard me say this before, time and time again, because the Japanese yen is such a manipulated currency, in my personal opinion, and I think you also find that it be this fact as well. It's hard to say that it's going to actually hit this level and then bounce back up, right? Typically in times of crisis, U.S. dollar, Japanese yen, Swiss franc, those are currency pairs that the rest of the world tends to gravitate to as a safe haven currency, just as a place where they can put their money at and feel like they will be able to get their money back when whatever the crises that's happening blows over. And time again, we've seen this with the Japanese yen. The only issue is with the Bank of Japan, of course, doesn't like it. Like a lot of people don't like it. And the reason being is because it just makes it more expensive for them to trade with other countries, because if their currency is valued higher, then that means that when someone from another country comes over to try to buy goods and services from them, then they're going to have to trade more of their dollars into Japanese yen to be able to purchase their goods and services, versus they could go someplace else that has like a lower valued currency and their money would go a lot farther. So a lot of times they go in and intervene to try to either devalue their currency, which would, in this particular case here, would send the Japanese yen lower, but essentially make this currency pair go higher. And so it's one of those things that you have to watch out, be mindful of if you're going to trade any currency pair with the yen involved. Make sure your stop losses are well thought out, and make sure you take profit. I won't try to let the money run. I would just make sure my take profits are well thought out as well, so that way you don't wind up getting crushed under the weight of a Bank of Japan intervention or talk of an intervention that causes this currency pair to just go haywire, right? But anyway, with this particular pair here, would I trade anything right now at the moment? No, I would not. We just broke through this level of support, so there is the potential for a couple things to happen. One, this thing, because it broke support, buyers could come into the market and push it back up and say, hey, you know what, it's low enough. Other thing is, it's broken through level support, and sellers could say that, hey, you know what, not low enough yet. Let's bring it all the way down towards this major area of support. If I did have to trade this particular pair, once again, I would look at the 140.823 is probably the take profit, and as you can see from where it's at right now, that's not a huge amount of money, and it's not really worth the risk at all. So once again, with this particular pair, that's the outer market. Some days the best trade you're gonna make is just being on the sideline, not making a trade at all. Believe it or not, right? It's better to make no money than to lose money, period, right? Because every time you lose money, that means what? You got to go back in, you got to try to recover a loss. And every time you try to recover a loss, it takes more effort to recover from a loss than it does to just add to a win, right? Or to add to a position that hasn't done anything. All right, so this right here is the Great Britain pound, Australian dollars. This was actually the last one I was in yesterday. And the cool thing about this one was we actually hit our price target that we were aiming for yesterday, today. But we got out of this one early yesterday. And The reason why we did, once again, I put on a risk-free trade, and I said I wanted to make some money versus no money. You know, I want to make sure I made some money. And on this particular period, I think I made like 5,000 or 6,000 or something like that. I don't remember. Um, but it was good money. I'm happy with it, right? Of course, had we stayed the course, we'd have made a lot more, and then I've been a lot more happier, maybe. Um, but I'm okay with what we got, and feel good about it. So I'm okay. This particular pair right here, once again, is caught up in the Fibonacci sequence, and you can see you got 1, 2, 3 sequences here. These first two have already been fulfilled, right? This is the A, this is the B, came up to the C, right? And it hit its D extension, which is right here, right? Same thing, A, the B, the C, right? And it hit its D extension right here. And so now what you've got is the third Fibonacci sequence, which is the A, the B. This is obviously the C. And price is looking to hit its extension. Now, here's the thing that you have to be careful, because a lot of times people just trade things blindly and they won't even put any type of thought into this at all. And then you're like, I'm just going to trade. And then when it doesn't work out the way they planned, then they get upset and say, well, none of this stuff works and this is all crap and I'm going to go back and work my 9 to 5, which is nothing wrong with that. But just kind of understand what you're doing before you start doing it, right? One of the reasons why these first two Fibonacci singles worked out so well is because if you look at how this price is moving and you look at the level of support and resistance, right? It stayed within a well-defined area of support and resistance, right? From here to here. Right? It stayed in a well-defined area of support and resistance. Now, once you get below this area of support, now there are some other additional areas of support here, right? But it could make it tougher for this price to reach this area. And the reason why I say that is because I'm not saying that it won't, but just saying that it could be a little bit tougher because one, these are areas that were recognized, and this was like recognized at the beginning of this year, right? So it's been a little while since prices hit that low, right? So we're talking about 52-week lows and all that good stuff. Usually when you're looking at a 52-week low, something really major had to happen to get you to that point, right? So if we get some extremely negative news, I think about Brexit, which we have been getting some pretty negative news as of late, definitely could be hitting that D extension. I'm more of the mindset of saying that it's probably gonna just hit this, keep on this this level of support here, right? And then maybe start the U-turn, start the bounce. One thing that you'll notice is that usually around the first of the year, price hits its U-turn, right? And it starts moving in the direction it's going to move for the first half of the year, right? So if you look right here, this right here is in January 2000 this year, right? Right, price hit a U-turn, should move up, and it stayed up all the way up until about April, right? Then it started moving back down again, right? These patterns repeat themselves over and over and over again, right? So price sold off here in October, and this is my own personal belief, and I could be wrong on this. I have been wrong before in the past. Price moves down, and I believe price will start the U-turn again here over the next couple of weeks. Particularly as we get closer to some type of decision with this Brexit, and as we find out more and more and more, work our way towards that. Okay, so just kind of keep that in mind when you're looking at your, looking at your charts and looking for stuff to trade. All right. Now is not the time to go all in unless you really see something that's really, really, really beautiful setup. With this particular pair right here, would I trade on this one right now? Um, Probably not. I have to see a little bit more, and here's the reason why: because price is obviously trending down, right? We're at a support line, right? Even though price is trending down and we're at a support line, if we're trending down, I'm looking to sell, right? And I'm only looking to sell when we get near resistance, right? And right now we're at support line, so I can't really sell at support, right? Especially on a green candlestick. Uh, Now, if we get some type of price confirmation, whereas we see this candlestick starts to turn red, and we're starting to get and maybe get an additional candlestick, red candlestick, then yeah, we get back in and resume selling. The only problem is though we're so close to our D extension that even if we start to sell now, it's still going to be kind of scary because man, once they hit this D extension, then we know that the Fibonacci sequence is complete, and we're right here at there's two lows right here. It's like very major, supports, area supports. Uh, Still wouldn't want to sell because price could be potentially getting ready to U-turn. We're at the end of the year, so there's a lot of factors going in right now that would make me kind of hesitant to even get into this one right here. So for right now, I'm gonna say nope. Not looking to do anything with this pair either. This brings up to the last one, which is the Great Britain Pound US dollar. Whew, man, that's a lot of talking today. Didn't plan on being here this long. This one right here is a pretty interesting pair, and you can see what the trend lines I got marked out here on this particular pair. I'm just marking the downtrends in this market, and I'm looking at the counter trend line breaks, right? And the reason why I did this is because if you notice right here, we got a good downward trend going, right? And what I'm waiting for is for this counter trend line break to occur. I have my buy entry here, and then I have my take profit, which is going to be up at this handle, and then my stop loss is going to be right here. So I'm just waiting for this to happen. I feel like this could occur over the next, couple of days or weeks or so. And once it does, plan on taking advantage of it. I think it's an opportunity to make some good money here. Just doesn't know exactly when it's going to occur, but you see the setup. And this goes back to what I was telling you earlier about let the market come to you. Don't go out and try to force it, right? I could have easily went out and said, ooh, I'm going to go ahead and just buy because I know it's going to come back up. And when it does, I'll make a killing. Yeah, and if I would have did that, I would have got killed in the market, right? So what I do is I know the setup that I'm looking for, right? Right? And I said, hey, once these events occur, right, I'm looking for X, Y, and Z to happen. Right, and I'm planning on making money off of it. It's almost like fishing. I don't know if any of you guys ever been fishing before, but when you go fishing, you have your setup, you have your tackle and everything, and depending on what type of fish you're trying to catch, that's the type of bait you're going to use, type of rig you're going to put together, and then you just get out there, you throw it in the water, and then what do? You wait for the fish to come to you, right? You just don't go out there and aggressively start, with a spear and start stabbing fish in the water. Maybe for Aquaman, I don't know, but. Other than that, no, you don't. Wait for it to come to you. All right, so that is pretty much it as far as what we're looking at today. Once again, I'm not really looking for any, not really looking to, not really looking to get into any trades right now at the moment. Sit on the sidelines, just wait for it to happen. Yesterday we went in and we did some experimental trades, and let's look at some of the results of these. These were the ones that we did where we did we tried to do like a 2-1 or I'm sorry, a 1-2-3 or 1-2-3, 1.5, whatever, risk to reward ratio. And I gotta tell you, man, I had no luck on it, man. First one I lost 58 pips, I lost another one 39 pips, and the last one was 53 pips. So for a total loss of about, what's that? Probably about like $1,100, $1,200 or so. Which sucks, but I'm okay with it. We're still up 13,000 for the week. The takeaway though from this, and the reason why I did this, right? Because you always hear all the time about, oh, you just gotta go in and do your risk reward ratio, and do a 1-2 or 1-3 or blah blah blah. and you'll be fine because you can lose two and or lose three times in a row and then just win one time and you'll be okay and blah blah blah. Yeah, yeah, possibly. But there's a lot of little nuances in here that people don't go into and get into the weeds and tell you about when you set those risk reward ratios. So a couple things. If you're gonna do that, one, make sure you're doing it on a just with a be consistent about the pair that you're trading. I would say stick with a pair that you're trading. Be consistent with that because part of your loss that gets factored in is also going to be your spread, right? When you're trading currency pairs, you remember there's a spread between the bid and the ask, and depending on what pair you're trading, your spread could be really tight or your spread could be really wide, and that can factor in to the loss equation when you're trading. Okay, so you got to be mindful of that. The other thing is you got to also be mindful that you're actually trading on a dollar for dollar 3 to 1 or 1 to 3 or 1 to 2 whatever ratio, right? Because I could have a trade where I'm willing to risk $100 and to get 300, so 100 pips to get 300 pips, right? And that is definitely a 1 to 3. And I could also be having a trade where I'm willing to risk 10 pips to get 30 pips, right? And that's 1 to 3 as well. So, but of course, if I lose just one of those 100 to 300 pips, me getting a 10 to 30 pip right is not gonna go back in and erase that loss that I just took on the other one. So you got to factor in the actual pip amount that you're going to be trading, not just the ratio, right? And then also too, I would say probably the biggest factor, one of the biggest deciding factors with it is going to be, helping you get it right, helping you, how can I say it? With helping you stay positive would be, gosh, I just lost my train of thought. Apologize there. So one of the biggest factors with helping you staying positive, gosh, I can't remember, man. I can't remember. I'm sorry, guys. I just lost my thought just that quick. I was thinking about a couple things at once and just blew it. But anyway, oh yeah, there it goes. The biggest thing to helping you be positive would be momentum, right? Look to trade. Always look to trade on the side of momentum, right? Because it doesn't do me any good to sit here and use a 3 to 1, a 1 to 3.5, whatever risk to reward ratio, right? And I'm trying to buy in a downward trending market because I'm just going to lose every time, right? I need to make sure that I'm doing that and I am trading in the direction of the market trend. So the market's trending down, I want to make sure I'm selling. If the market's trending up, I want to make sure I'm purchasing, right? It's point blank period, right? And then there's other little nuances I want to go in there. I want to try to correct just to make sure that I'm on the right side of the trade. So what I'm going to do is I'm going to put on another trade again. I'm going to try this again, but this time, last time I tried it, I just did it and just to try it out. And I did it, I was buying, which as you can see, the market was clearly in a downward trend. Just because I just want to try it, see it, just being, stupid. I'm gonna do it again, but this time I'm gonna set it with the trend of the market. We're gonna see how it rolls and see if we can make some money off of it. Anyway, listen, guys, thanks for tuning in. This ran over a little bit longer than what I wanted to today. I'm trying to keep these a little bit more shorter, a little more compact and concise. If you haven't already, don't forget to check out Smart Trader. Right, don't forget to go online and register there. Just a full disclosure, we are an affiliate of the Smart Trader platform. So therefore, if you do decide to make a purchase and you have used our link to find it, then we'll actually get paid a little small something for that, and which that helps us to, like I said, keep the information that we're giving to you right now for free, keeps our channels up, and helps us, be able to give this information to you. Love to be able to still continue to give you this free information every week or every day rather. And hopefully you guys find some use out of it. And if you do find some use out of it, please, 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 like I said, sign up when you go to Smart Trader. Use our link so that way we can get compensated for it. Once again, I am your host, Lewis, and I am about to get out of here and get on with my trading day. Hopefully, you guys are going to make a ton of money today. I will see you in about 24 hours back here so that way we can go back and review all the money you've made and all the trades that we've made over this trading period. Anyway, man, take care of yourselves, take care of each other. God bless, and I will talk to you soon. Take care.